Good morning. Good morning. It's Jonathan Barrett with the on the go, the morning debrief. The current time is 7:14, and it's the 8th of June. Okay. Interestingly, yesterday RBA decided not to move on interest rates. We probably anticipated that would be the case, given the GDP numbers we had the week before. It looks like the market or the economy appears to be slowing down, as is India and China. That will have a poor reflection, I think, on economic circumstance in Australia. As such, the RBA left rates at 4.75%, pretty much widely tipped. Last night in the US, basically the big key bit was Bernanke's talk. The market was sort of keen to hear what he had to say about QE1, QE2, and the possibility of QE3. We didn't get much. QE3, he basically said it's a frustrating but slow recovery. We know that. We know economic numbers are not that good. I think there is this chance that slowdown will gather speed, and it's really up, I think, to the Fed to, via persuasion, to really get that optimism in the States picked up. And believe you me, when you look at the numbers, it is purely that optimism that the citizens of the States actually have over the economy, because, yeah, that's the thing that I think has been carrying it. Although, as mentioned in the week's reports over the last couple of weeks, we feel that those asset prices needed to realign, and that's exactly what is happening at the moment. And let's have a quick look at what we have seen. I guess the most important one there is, I guess, let's have a quick overview. In the US, Bernanke's speech came out, and as I said, frustratingly slow recovery is pretty much the key there. And then we see the Dow. The Dow closed down 19.5 points. The S&P was down 1.23. The Nasdaq was down 1. Pretty muted, sort of, I guess, decline. Top 50 was in Europe was up 9. The FTSE was up 1. CAC was up 8, and the DAX was up 18. So a little bit positive there. I guess the other major bits in Australia, how that market actually traded, down 2, pretty muted response, 4,564. So I guess when you look at it, you know, things are not as rosy and in the States, and I think that's really reflecting on the equity markets, and I think you probably might see a little bit more of a slowdown. In terms of economic numbers last night, what did we have out that I guess was anything important? I guess factory orders in Germany were good, and they were actually down 7.2%, still positive number, but the consensus was for a 9.1%. So things in Europe perhaps not as strong as what we expected. Factory orders 2.8 though, that was the year on year. The month-on-month data, as you can see, was just a little bit better. Okay, United States consumer credits, that was probably it, $6.25 billion, and obviously we've talked about Bernanke's speech. So if anything there, quite interesting. Okay, right, now let's have a look at the numbers as we normally do. Just have a quick look. Dollar index is obviously the key. We've checked out equities. Dollar index, there you can see pretty negative response there, and that policy for a weak dollar remains in play. How has that affected some of the commodities? One would expect to see that that weaker dollar, strong support mechanism, stronger equity prices actually come to play. It sort of has. Let's just run through a few of those. Crude oil. There's the daily chart there, and it's on a precipice, as we know, and that's it there. Had a bit of a bounce from that 98. Let's just move that in a little bit. I think if it takes out that 98 on the downside, then down she comes. But as you can see, it's that US dollar, weakness in the US dollar, which is certainly holding it up. And copper, I mean, it's nuts when you look at some of this stuff. Yeah, like you're seeing the economy slowing down, slowing around the world, yet these prices are high, and it is a function of the US dollar, which is its own worst enemy, because the weaker dollar, and you know, I've laboured it to death, the fact that these commodity prices, it's creating a bit of a vacuum, but let's see how that unfolds, but certainly not positive. So when you look at that, you know, copper was up. Look at some of the softs as well. Corn found a little bit of steady ground after its big move to the downside the other day. Same with wheat, still under pressure, but we're at good support. Soybeans, as you know, is something that we've kept on for some time. We have a warrant out on soybeans, and we had a relatively positive up 9 cents last night, and that's sort of playing as to where we want it to go. So quite comfortable on that. Okay, having a quick look at gold. Gold 1544. It's just wavering around this time, but we did If the market's trying to go down on it, but it seems to be holding, that's a positive sign for gold. Silver, 37.11, and if anything there, just a little bit of sideways price action, but as you can see, that weak dollar certainly looking to hold it up. Now that's, I guess, looking at the markets generally. Just have a quick look at the currencies, particularly that Aussie. Obviously no change in interest rates, and expectations should have been supportive to the local market, which it did, but the Aussie should have come under a little bit of pressure as well. We're just heading sideways there. As commodities come under pressure, we'll probably expect a little bit of downward bias towards the Aussie. Really needs to take up some of these levels, 106.70 and then 106 before we see any light on that. In terms of economic calendars, what have we got coming up for Wednesday? Basically, Westpac consumer confidence today in Australia, and I guess unemployment rate in Switzerland. Eurozone GDP, pretty important. Industrial production in Germany. Fed beige book, which obviously will be interesting, and so quite a bit of data out of there in Japan. So if anything, overall, I think it's, once again, it's technically trading market, but I think those comments from Bernanke pretty much says it all. No QE3. The economy's now got to weather itself. It's got to perform by itself, and that might create some wild swings in terms of the asset markets, as those numbers don't show what Bernanke wants them to show. And as a result of that, you might see that continued weakness. Let's see how we go. That's it from me. Have a great day, and we'll talk to you tomorrow. Bye for now.